Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Nvdia, ticker NVDA. Now why are we doing stock analysis on this? Well, we are breaking into, or have just broken into, an all-time high. So if we go over to the daily chart, you can kind of see, and I mean we can go to an all-time chart. We are at an all-time high, so it makes sense to kind of see where do we think this will kind of stop going to the upside. And it's usually good, as we use standard deviations for our analysis or part of the analysis, it makes sense to do it when the stocks are at all-time high, because a lot of people don't know where it's going to stop if you're only trading off support and resistance lines that you plot naturally. So to get straight into it, we use daily charts to see is there any gaps that need to be filled, because if the stock starts pulling back, these are levels where we could see the pullback return to. And the key one that sticks out to me is kind of this 232 level. Because obviously we had our gap here, and when I'm looking for gaps, yes, we have some smaller gaps, for example here down at about 210, it's actually 209. These ones I don't tend to put as much because they're not as clear to the average trader. Depending if you're investing or trading, these kind of gaps will stand out to everyone. They're very large gaps and very clear, so these tend to have stronger reactions when the stock comes into this level. Whereas this one, yes, you will probably get somewhat of a reaction down at this kind of 209.50, but it won't be as strong as reaction as this 232 level. So we will instead of kind of avoid these and only be looking at strong key levels, because those are really the only levels we want to be trading off where we're going to see reactions. So yeah, off the gap fill side of things, we're only going to be plotting, we'll edit this to 232 as that kind of key level, and if we're shorting, this is going to be an area we would most likely look to lock in at least some profits. Now we'll plot the standard deviations and see where do we think it's going to go, and you'll see today it actually came into the first deviation on the daily, and so this tells us that we would be quite likely to start seeing some selling pressure, and it will be a bit harder for it now to kind of like break up and push higher. And then the next closest key level will be kind of this 274 level. And when we're looking at these levels, we tend to, especially like this case where they're quite close together, we tend to use them as a collective level. So we tend to, let's say shorting, for example, we'll tend to short half the size at 262 and the other half at 274, because it can sometimes push all the way to 274 before getting its large pullback. However, if we go over to the 1 minute chart, you will see that intraday it tested this 262 level. You got a pullback from it. I mean, it pulled back $4, so would have provided that day trade, and that's why I give you these levels, as you can use them as day trades, you can use them as swing trades, you can, depending on your plan, you can use these levels in different ways. If you were looking for a day trade, obviously shorting at this level provided, you know, a 1% pullback or so. So especially with options, that could have been quite a profitable trade, or even 1% alone is quite a good trade. Comes back to this level, pull back again before finally breaking through, and what you'll see is it broke through, retested this level, and then you'll see it continued up. That does kind of show us confirmation that it's trying to push then to that next deviation, and that was made even clearer today when it pushed up to 166 and then pull back again to this 262 level, and then again kind of use it as a support to bounce off. So what this does tell us, looking at it from an intraday basis, is that it's trying more likely to push towards that 274 instead of starting the pullback now. So if you're trading from a swing buy set of things, we would be looking more now for this 274 target for our swing to then start working, or a swing short to start working. So for right now, that is kind of our key level. The 262 to where we are now, to kind of 274 is all considered a kind of low risk short area, and if you are long, it would make sense to lock in some profits here, and at a push maybe have a target of 274, because coming into there again we would expect a relatively large pullback. We would expect to pull back to at least 262, but wouldn't be surprised if that was kind of the end of the move, at least for now, and we see a pullback at least in kind of this into the statistical mean, so to around to 239, and maybe even down to the gap for about 232. So for right now, those are our key levels. Obviously we can place the other support and resistance lines just in case it continues higher, and if so, we're going to have run around 310, $300. This will be a key level. If it comes into here, not only do you have the second deviation on the 4 hour, on the daily, sorry, but you also have the psychological level of $300. So I would say 9 times out of 10, maybe 9.5 times out of 10, you will get a heavy pullback at that $300 level if it pushes all the way up to there. So that's usually a good short area, and if you are long, even if you think it's going to go high, usually a good area to lock in at least some sort of profit before coming into that level. And then again, obviously, if it does continue higher, 335, 345, again, if it's coming into these kind of levels, even if it's coming into the $300 level, we would make a new video, because that would most likely provide a very good swing and day trade. And if it starts putting back, where would we see low risk buying trees? We wouldn't personally be looking, or at least how I trade, wouldn't really be looking to get long until it comes down to the low 200 to around 203, all the way to the high 100 to around 190. So obviously that's quite a long way away, so we probably wouldn't be looking to get long on this stock anytime soon, but we would be looking, or at least how I trade, looking to get short kind of around where it is now, and kind of, yeah, if it continues to push higher. But again, depending on how you trade, you will use these levels differently, but as long as you have your working strategy, your risk managed, it doesn't matter really if you go long or short, as long as you use these levels. They're just levels where we're going to get strong reactions. So again, you can use them however you like. So I hope you enjoyed the video, I hope to see you in the next one, and that's it. Peace.